But I don't think people will find it ultimately to be overwhelming.
Terrific. So what exactly are the legal lessons we're going to be talking about? Here are the 5 that we think may be the most useful to other corporations that are starting to consider adding Bitcoin into their treasuries and leave them here. And we'll go through each one of them. Before going any further, though, I did want to make one more plug for the documents that we've open sourced. Phong mentioned them in the last session. We published about 7 documents. And we'll be discussing some of them here. You don't have to refer to them on the website, but we did want to make sure to reference them again so people can note it or look for them afterwards. All right, so with that, let's go ahead and start with lesson number 1. Actually, let me show a picture of these documents. We have them up on our website. There we go. We will move to lesson number 1. What you do with Bitcoin will drive the regulatory issues. As it turns out, what you do with Bitcoin precisely can make a huge difference in the regulations that apply. Dax, you're a seasoned lawyer when it comes to the regulatory landscape that applies to cryptocurrencies and especially Bitcoin. Can you give people an idea of the main areas of regulation? I think it's a good starting point, other than the security bill, which we'll talk to Tom about in a minute or so.
Absolutely. So there are 3 core regulatory areas that a company needs to consider with the Bitcoin strategy. The first are the federal and state money services business laws, such as those that are administered by FinCEN. Money services business laws prevent money laundering and terrorist financing, and they impose reporting and licensing and examination requirements on non-bank financial institutions. A company that's merely investing in Bitcoin usually isn't going to trip up against these money services business laws directly unless that company expands the scope of their activities to include things like wallet or exchange services. The second area that's relevant on the regulatory side are the federal sanctions laws, such as those that are enforced by OFAC. And sanctions laws really protect us by requiring that all U.S. persons avoid dealing with the enemy, such as criminals and terrorists on certain government lists, or by dealing with certain embargoed countries. Sanctions laws are relevant to someone who's investing in Bitcoin because Bitcoin is an international digital currency network, and it will be important for a company to vet its counterparties against those government lists. Third, commodities laws, such as those that are administered by the CFTC, impose requirements and restrictions related to trading and other aspects of contracts that derive their value from an underlying asset, such as futures contracts and swap contracts that might be tied, for instance, to things like barrels of oil. And a company that's investing in Bitcoin that may wish to hedge the volatility of the Bitcoin price may want to work with derivatives to hedge that risk, and if so, would need to take a close look at commodities laws.
Thanks, Zach. So it seems clear that many laws can apply to Bitcoin activities. So, for example, if you're a Bitcoin exchange or you provide Bitcoin custodial services, there are special laws that you need to comply with or licenses that you need to get at the federal or state level. But let's focus here on the upshot for our purposes. Can you explain why a strategy of merely buying and holding Bitcoin as a Treasury reserve asset doesn't need to drag in a lot of those laws as a practical matter?
Sure. Yeah, I think really 2 reasons. The first is that investment in Bitcoin is not the type of activity that these laws were intended to regulate. Conversely, a company that's investing in Bitcoin is actually the type of entity that these laws were designed to protect, for instance, in its dealings with custodians and brokers.
Great. So I think what that means is the laws are still there in the background. And in fact, a lot of those laws need to be complied with by the vendors, right, that one uses. If you're the corporation that's just buying and holding Bitcoin, your vendors, in many cases, are going to need to pay attention to those laws. But let's pause there on those particular laws, and then let's talk a little bit about securities, and we'll come back and wrap things up in a moment. Tom, you're a securities lawyer, and I think it's a really important question or issue that we need to get on the table right at the beginning, which is Bitcoin isn't considered a security. And it's a really, really important significant fact, because it means a lot of the SEC regulations that would apply if Bitcoin were a security just aren't going to apply. And this is particularly important for publicly traded companies, because obviously publicly traded companies have to pay a lot of attention to the securities laws. Can you explain why Bitcoin isn't a security?
Sure, man. Let me go through a little. Everyone knows that stocks, bonds, options, and the like are securities. And by contrast, cash like dollars and gold aren't. The current SEC test basically says it's a security created when there's investment of money in a common enterprise with an expectation of profit derived from the efforts of others. So using this test, actually, the SEC has taken the view that some digital coins are in fact securities, mostly because they represent passive investments that require a promoter to build out a network and make the enterprise connected to that coin successful. Bitcoin's a little bit different, though. The SEC's view is that that network is currently sufficiently decentralized. Purchasers no longer expect any person or group to be carrying on managerial or entrepreneurial functions. And so that doesn't really fit within the test of security. And so if you have no central third parties efforts are determining the enterprise and the network on which it functions operationally, there really isn't a reason to apply the disclosure regime of federal securities law to Bitcoin. And so senior SEC officials have said that they're of the view that under the SEC's current test, Bitcoin does not constitute security. And in that way, Bitcoin in some ways is quite different from other things that you see in initial coin.
So Bitcoin's not a security. What does it mean about, whether a company like MicroStrategy that has acquired and holds Bitcoin becomes an investment company?
Yeah, man, glad to clarify this, because I know you get this question quite a bit from folks. Hey, we hold Bitcoin, why isn't there an investment company? And the answer to that is that the statutory definition of an investment company depends on a company either holding a specific percentage of securities or holding itself out as an entity that primarily reinvests or trades securities. So the fact that Bitcoin isn't a security for SEC purposes basically means it's outside the purview of the Investment Company Act. And so that's why MicroStrategy isn't an investment company.
Now, similarly, we get the question often whether MicroStrategy has become an ETF because we hold as much Bitcoin as we do. Can you explain also why we're not an ETF? This is an important point to underscore as well.
Sure. ETF, as everyone knows, stands for Exchange Traded Fund. And securities, and then their in trade on market. MicroStrategy is not an ETF in part because we're simply just not a registered investment company, basically because of that issue of Bitcoin not being a security. In addition, ETFs are structured sort of completely differently from MicroStrategy Corporation. ETFs have arrangements with financial institutions to keep their market price and net asset values close to each other by having the institution engage in arbitrage by either redeeming shares directly to the ETF or change the underlying assets or by purchasing shares in the ETF. MicroStrategy has none of those arrangements. There's no shareholders entitled to exchange MicroStrategy shares for any of its underlying assets. So, in short, no, MicroStrategy is simply not an ETF.
Okay, so to recap, Bitcoin is not a security for securities law purposes. MicroStrategy hasn't become an investment company because of the Bitcoin that we've acquired and hold. We're also not an ETF. Let's just change the hypo a little bit. What if a company like MicroStrategy wanted to invest indirectly in Bitcoin. So not directly invest and hold it, but buy, say, shares in a Bitcoin fund. Does that change the analysis at all?
So, I mean, absolutely it does. As Dax was saying earlier, how you exactly deal with Bitcoin really affects the regulatory involved, and that applies to the security side as well. If you invest indirectly in Bitcoin through a fund, for example, now you're within that SEC definition of the security because you don't hold the Bitcoin, you own fund shares. And those fund shares are going to be deriving their value in part from the actions of the fund manager. So in that case, the company, those would be considered securities, and the company would then have to start looking at those investment company act thresholds as to what amount of securities the company can hold before it becomes an investment company. Now, there may be ways to structure fund investments to avoid tripping those thresholds, but those get very complicated and maybe beyond the scope of this presentation.
Okay. So we just did a very, very quick tour of a number of different areas of the law that can apply to a company's interaction with Bitcoin. But there's a key takeaway here, and I want to mention this as we wrap up this first lesson. And that is that for an operating company like MicroStrategy, merely buying and holding Bitcoin directly for Treasury purposes means many regulations like the money services business laws, commodity regulations, assuming you're not hedging or engaging in Bitcoin derivatives, and the Investment Company Act, et cetera, they just generally aren't going to apply directly to a corporation like MicroStrategy. And that really was an important point for us because it meant that investing in Bitcoin turned out not to be as daunting from a regulatory standpoint as we thought it might be. Now, if your business wants to do something more or different with Bitcoin, like what a PayPal or a Square or Coinbase does, then other regulatory considerations would definitely come into play. But for just buying and holding Bitcoin directly for Treasury purposes, the regulatory demands are actually much more limited. Still things to consider, but it's very manageable. All right, so let's wrap up the first lesson and let's head over to lesson number 2. Una, do you want to kick us off on this one?
Sure. So we picked corporate governance as one of the key points we're covering today because it's very important for publicly traded companies like MicroStrategy. It's about making sure that our board of directors and our executive officers are satisfying their fiduciary duties to the business. And it really shapes views on things such as what sort of due diligence is advisable, how policies and procedures should work, and internal controls. And in many ways, corporate governance serves as the backdrop to all of the other points that we're discussing in this session. And I really think this is all the more important when it comes to Bitcoin because just as Tom and Dax were explaining, Bitcoin is not a conventional asset like stocks or bonds. And as evidence of that, when we checked which investments the company was authorized to make, we weren't surprised at all to find that Bitcoin and other digital assets were not specifically authorized. So we knew from the get-go that we need to get approval from our board for MicroStrategy to invest in Bitcoin, especially at any significant levels.
Now, yes, because of that, you might remember one of the first things that we did to support corporate governance was to have our executive team, as well as our board, spend a lot of time at the beginning just getting educated about Bitcoin. And Phong and Jeremy made reference to that in their presentation. And then also understanding why it could be an asset that we'd want to invest in and what considerations are implicated. Here we get to one of the documents that we posted publicly. If you go to our website, you'll see a document called Key Considerations for Corporate Investment in Bitcoin. This document lists out many of the important areas of learning that we studied up on as we consider our Bitcoin initiative, and I would encourage everybody to go look at that document since we're not going to have time to consider all of those things here in this session. Dax and Tom, as experts in your field, we were very fortunate to have you help us get up to speed. Can you highlight for everyone some of the more important considerations for boards to get familiar with as they consider investing in Bitcoin to support corporate governance?
Absolutely. So from a technology perspective, Bitcoin really is novel. It's not backed by anyone. It's an asset that's tracked on an open source ledger that everyone can see and have access to, but no one controls. Transactions can't be reversed. by design, there's only 21 million Bitcoin that can ever exist, and they be introduced at a certain fixed supply. There's 24/7 trading that you heard about earlier in these sessions, which is different from traditional markets. And Bitcoins really are not coins at all in a tangible sense. They are ledger entries that are managed through public and private keys. And so if you lose your key, you lose your Bitcoin. So that brings us to the second point, which is custodial arrangements, that given the high stakes of safeguarding and preserving your assets, it's important to make smart decisions about how you will custody the Bitcoin and which custodians you'll use, and also the different internal policies for engaging with those custodians.
So, you know, the market for Bitcoin is pretty unique. I mean, 24/7, it's very different from stocks and bonds. I think it's worth talking a little bit more about the market factors, which will then play into some of our SEC disclosures, which we'll talk about later. Tom, can you comment on that?
Yeah, and look, market factors are going to be very important in making a decision to invest in Bitcoin, and the board and management is going to have to look at those. In particular, two are quite unique to Bitcoin. One, unsurprising to the audience, is volatility is a fact of life and very significant in the Bitcoin market. Volatility will have a significant impact on accounting and then disclosure as a result, which we'll discuss a little bit later in the presentation. Secondly, liquidity is often an issue that is raised in the Bitcoin market. Although with the increased size of the market, liquidity has significantly improved recently. So what liquidity would look like in a panic situation remains something of an unknown. MicroStrategy, for example, took the view that it was going to hold the cash necessary for day-to-day operations of its business in traditional cash investments to reduce any requirement to have to find immediate liquidity in the Bitcoin market, even as Bitcoin market liquidity improves.
I want to follow up specifically on fiduciary duties, since they make up the legal framework for corporate governance. Tom, can you please explain briefly what fiduciary duties are relevant and how companies can go about satisfying them, especially in the context of investing in Bitcoin?
Sure. There are really two key fiduciary duties that boards need to be aware of in determining to invest in Bitcoin. The first one is the duty of care and the need to get informed. Duty of care requires that boards become informed after deliberative decision making that's based on all the material information that's reasonably available to them. This is going to be thoughtful, and as a practical matter, look, board members are going to have to do some homework here on Bitcoin. It's an emerging technology in an emerging market. This is not time for investors for directors to be passive and sit as a bump on the line. They need to look closely and clearly at all the benefits and risks and understand potential losses, accounting issues, regulatory uncertainty, and the like. And a key part of that is going to be that board members are entitled to rely on outside experts. And then when MicroStrategy was looking at this, he brought in a number of outside experts on Bitcoin to talk to the board about it, right?
Yeah, that's right. I mean, obviously we had yourself and Dax, but we also consulted other experts, and I think getting information directly from experts was very helpful to us in our due diligence. What about the other fiduciary?
Yeah, the second fiduciary duty is duty of loyalty and potential conflicts of interest. And, you know, the duty of loyalty requires that fiduciaries act or decide not to act in a disinterested manner in an independent basis in good faith with an honest belief that the actions in the best interest of the company. That raises the issue of potential conflicts. You'll want to be mindful of any potential conflict of interest you normally have with any company that someone has used it in a potential broker or custodian you want to use. But the more difficult maybe Bitcoin-specific issue relates to trading of Bitcoin by individuals. It creates the problems of inside information, front running, and the like, and requires a specific Bitcoin trading policy, which we'll discuss further here when we talk about some of the policies and procedures that MicroStrategy is incorporating.
Before we leave the topic of boards, Dax, I'm sure you advise a lot of boards in the cryptocurrency and the Bitcoin space. Do you have any thoughts you want to add to how to get boards up to speed and how it all comes together for a board decision?
I'll just add one thought, which is that this is a very complex area with lots of moving parts and pieces. And this is an area where I think lawyers can be very helpful. You know, the in-house lawyers and outside advisors to just parse through the various interrelated legal considerations and to help the board and the business make good decisions and to organize the process and the documentation well.
So I think, the key takeaway from this lesson is that corporate governance is really the backdrop for pretty much everything that one does to help, execute on a Bitcoin strategy. And so you really have to think about governance from the beginning, especially if you're a publicly traded company. It'll also help you get through your board and your governance processes a lot more smoothly if you think about it from the beginning. So that wraps up lesson number 2, and we'll move on to lesson number 3. Policies and procedures are your friends. I think you wanted to kick that one off as well.
Yep. So given the regulatory and corporate governance considerations we just talked about, it's not surprising that our third key legal area to discuss is policies and procedures. So policies and procedures effectively act as the guardrails for the company to invest in Bitcoin. Dax, you helped us a lot in formulating policies and procedures for investment in Bitcoin. Since most other companies out there thinking about investing in Bitcoin, probably in a position similar to what MicroStrategy was in, as in little to no prior experience with Bitcoin. Based on your experience with us, what's your advice to them about how to think about policies and procedures in this context?
Well, from a big picture perspective, I'd say it's important, first of all, just to define clearly the scope of activities and really the investment thesis of a company, to know what you want to do. And that's going to inform really the focus of the policies and procedures that you put in place. Recognize that this is a rapidly evolving area where the legal landscape changes on us frequently. So we need to be nimble and dynamic, like bamboo blowing in the wind. And then to implement guardrails that are tailored to the company's specific objectives on the investment side, calibrated to their organizational and governance structure, their regulatory profile, and those of their selected partners like the custodians and brokers, and also the company's risk appetite on different issues. And just recognize that no two companies are going to be the same, and there will be opportunities to iterate. And then lastly, I guess I would say it's important to look around for best practices and find good advisors. And I think that this conference and the documentation posted will go a long way in that regard.
And I know internal controls is another important area of focus for flagging, especially for publicly traded companies. Tom, can you comment on this?
Yeah, so policies and procedures are going to be important, and they're going to have to be written down because auditors are going to audit a company's internal controls under Sarbanes-Oxley Section 404. So they're going to look closely at your control environment and how you are purchasing and holding any Bitcoin investments that you make.
Well, with that background on policies and procedures generally and their importance, let's talk about a concrete policy, and that's our Treasury Reserve Policy that we developed for our investment in Bitcoin. It's also one of the documents that we've shared publicly for people to view. I guess both Dax and Tom, when we developed our policy, you helped us identify areas that we should consider including in the Treasury Reserve Policy. Can you touch on some of the sort of more important considerations for that Treasury Reserve Policy, that maybe more Bitcoin specific?
Sure. Well, from my perspective, one of the first items to consider are your people issues. Who's going to be making the decisions and the strategies, who will be implementing those strategies, who might be providing some sort of oversight and controls for those decisions, and how will all your people work together to both meet sort of the need for speed, but also to keep good controls in place.
Right. What about policies and procedures around how much money a corporation can and should put into, say, Bitcoin versus keeping in cash? I think that was an important issue that we discussed a lot internally. Tom, can you comment on that?
Yeah, no, that's frightening. MicroStrategy is taking the view that it wants to hold cash that day-to-day needs of the business, and that allows us to mitigate those liquidity risks we talked about earlier in Bitcoin. So the board looked at different scenarios and determined what was going to be needed for working capital, as well as how cash reserve might be deployed for ongoing business requirements. This is an example, as I said earlier, no company's the same, it's going to vary from company to company, and you need to take into account what you're expecting